Navigating the world of credit building can often feel like running in circles, especially when every traditional financial product demands an established history before they even consider giving you a chance. People constantly look for accessible entry points to boost their financial standing without facing steep barriers to entry. Platforms designed to simplify this process have gained massive popularity because they remove traditional roadblocks. Understanding the exact requirements for these services helps clarify how modern financial tools operate and what users actually need to get started. When it comes to using Kikoff, the baseline credit score requirement is remarkably straightforward because there is essentially no credit score requirement at all. Traditional lenders, credit card companies, and personal loan providers usually enforce strict minimum credit score thresholds. If an applicant falls below that specific number, automatic rejection follows. Kikoff operates entirely differently by bypassing traditional credit checks during the initial application phase. This means individuals with low credit, bad credit, or even absolute zero credit history can qualify without any issue. Many prospective users assume that a service targeting credit improvement must require a baseline fair or poor score to enroll. In reality, absolute beginners who have never owned a credit card, taken out a loan, or appeared on a credit report can sign up with zero difficulty. The platform was specifically engineered for individuals starting from scratch or recovering from severe financial setbacks. Because no hard credit inquiry occurs when opening the account, the application process itself will not cause any temporary dip in a person's score. The mechanics behind how the system builds credit rely on establishing positive payment history and managing credit utilization rather than judging past financial mistakes. Upon signing up, users typically get approved for a trade line. This setup allows participants to make small, manageable monthly payments starting at a very low cost. Each on-time payment gets reported directly to major credit bureaus like Equifax, Experian, and TransUnion. Over time, these consistent reports demonstrate financial reliability to outside lenders, gradually lifting an individual's overall profile. People often wonder if having an extremely low score, such as numbers dipping into the 400s, will disqualify them. Statistics provided by credit-building platforms show that many participants begin their journey with scores well below 600. In fact, historical data indicates that users starting with scores under 600 frequently see significant score increases over the course of a year simply by maintaining consistent, on-time payments. The absence of a minimum score barrier means that no one is priced out or turned away due to past financial hardships. Beyond just the main credit account feature, many modern financial tracking apps incorporate additional tools like rent and utility reporting. These supplementary features allow regular monthly living expenses to count toward building a credit profile. Since paying rent or utility bills does not traditionally factor into a credit score automatically, integrating these payments offers another avenue for individuals who might otherwise struggle to demonstrate positive financial habits. Because these services also avoid hidden interest charges or surprise penalty fees, users can manage their accounts safely without risking further debt accumulation. Ultimately, the structure of modern credit-building services emphasizes inclusion over exclusion. By eliminating minimum credit score prerequisites, platforms like Kikoff open the door for millions of consumers who are locked out of traditional banking products. Anyone looking to establish a positive credit trajectory can utilize these tools regardless of their current financial standing, making the path toward financial health much more accessible.